Welcome back to Fast Market here on the Schwab Network. It's time for Cash Tags. Let's bring in our next guest. That's going to be Landon Swan. He's the co-founder at LikeFolio. Welcome back to the show, Landon.
Thank you. Good to be here.
All right, so it's almost lunchtime. We're talking food, restaurants, Darden restaurants. The stock had a really good run as more people, I think, were going out to restaurants over the last year and a half, but we've seen some weakness here lately. What kind of data do you have going into this earnings event?
Yeah, I tell you what, the stock was like 172, 173, something like that, pulled back and it's kind of flattened out at right around 150 where it's been before, and could be a bit of a support level here. When we look at the data, we like to, first of all, I think you take a look at just the overall brands. They have so many different brands, so it's kind of a good idea to get a sense of which of the brands are doing really well. And not surprised to say that Olive Garden is kind of leading the way when it comes to improvement on a year-over-year basis. They're always the kind of the leader for Darden, but they're actually improving the most on a year-over-year basis as well. And then they've got Longhorn that's also doing really well. In fact, on their last quarterly call, they mentioned how Longhorn was actually doing well. And you're kind of seeing a contrast between some of their more casual restaurants and more of their fine dining. So you can see that, Eddie V's and Capital Grille are towards the bottom here of this chart. You do have Ruth's Chris kind of bucking the trend. That's more fine dining for sure. But Olive Garden and Longhorn, the more casual, are leading the way. So those top three, I think, are going to be the key ones to watch for over the next little bit for this company. But Olive Garden does make up a very large percentage of their revenue, so it's good to see that they're growing. And when you compare them across their competitors, you can look at Eat, EAT, and Cake at Cheesecake Factory and Chili's, and you look at the happiness on those, and actually that's a little bit of a concern. So we've got Darden restaurants at the lowest of the happiness here. Now, it's not a huge spread, 67 to 74. The size of the bars may, make you think it's a much bigger spread than it is, but still 7 points is worth noting. So it's a little bit of a concern there, but we still have, if you look at inside of the inside of the brand itself, it's actually Olive Garden is probably the one that's bringing that down. They're only 63% happiness. But some of the more fine dining stuff like Capital Grille is up to like 83%. So, it just depends on which brand you look at. And it's tough to compare to just one, just a restaurant or a company that just has mostly one restaurant like Cheesecake. But the last thing that I want to look at is the web visits. Now, obviously, the web visits are not as critical for a restaurant. That's big. It's bigger for more retailers and things like that. But you can still get a sense when people visit the website, they're thinking about eating there. Maybe they're thinking about placing a to-go order, something like that. We do have them at plus 10% on a year-over-year basis. So seeing a little bit of, unexpected strength from summer to summer, or as we, end out the summer here in September, a little bit of plus 10% on a year-over-year basis. So overall, with the pullback in the stock and just the relative strength of the web visits, plus the fact that they're big brands, the ones that are really important, are actually doing fairly well. And I think they're onboarding Ruth's Chris fairly well based on our data. I'd say that we're leaning a little bit bullish. I mean, if this stock was still trading at the low 170s, or if it was making new highs at 180, I'd be a little more hesitant. But the pullback, I think, gives us a little bit of an opportunity to be contrarian and say, you know what, I think that this company was more fairly priced at 165 or 170, somewhere in there. So 150 can feel like a bargain. So we've got a very slight bullish lean on Darden going into this earnings report.
Landon, though it's not surprising, their cost of labor is still slightly higher and going up. Their cost of goods sold is all coming down. A bunch of their expenses seem to be coming down, which should be adding to their profit margins. They're supposed to jump up here as, like I said, some of their expenses start to come down. But do you have any data to explain why this stock sold off as hard as it did? Because you're right, this 150 level from a technical perspective is pretty solid level from a long ago resistance. Now it looks like it's support, but boy, this needs some good data here, Landon, because this stock is sold off hard.
It has. And we've actually had a bearish alert on this company for a little while now. So, we like to see that pullback, and some of the data that we had was fairly bearish on it, but now a lot of that is kind of turning the corner and getting more into the bullish mark. So we haven't officially taken off the call, but we're kind of warning our clients that we do expect a decent report here. So maybe, buy some calls if they've sold short, something like that. But at this level, it's, from a technical standpoint, you either break it here or you're bouncing off of it, most likely on an earnings report. And our data is, again, it's been bearish, but now it's turned the corner to slightly bullish, mostly led by Olive Garden and Longhorn. And so those two companies doing pretty well, or those two brands doing pretty well. Ruth's Chris, again, the onboarding there seems to be doing pretty well. Some of their other, fine dining is not doing as well. We do have data that shows that people are, quote, trading down. So instead of, spending a lot more money at Eddie V's, they're saying, you know what, let's just go to Longhorn and save some money. It's still just as nice, good experience, whatever. They're saving some money, basically. Not saying that with Ruth's Chris. So that's kind of the one that's bucking that trend. So between those three, I think that's what's causing us to lean a little bit bullish. And if you guys know our scoring, if you get to 20, that's where we're bullish. We're at plus 21 on Darden going into this, so just barely over the mark. Good enough to make a bet, I think, at the 150 level here. But again, if it gets 165 or so, then I think that's good enough for me. I wouldn't go above that.
Landon, when you guys look at your data, especially, I kind of want to throw in the crude oil debate here, where you got crude oil at $90 a barrel, continuing to move higher. Does that really play into data when you guys look at some of the metrics where, hey, oil prices are up, 17% over the last couple months here? That means driving somewhere, I'm going to have less money in my pocket. If you have $100 at the beginning of the month and you can spend 30 on gas, now it's 45, 50 bucks. I mean, do you have data that kind of has a little bit of inkling into maybe consumer spending? Because I think that's going to be the key, is the macro backdrop of the consumer going into the holiday shopping season.
Yeah, I think it's a good point. And, we've actually looked into that somewhat and just dove in to see, does that affect people? And from what we've seen when it comes to gas prices, the biggest thing that affects is the road trip vacation. People aren't really talking about not doing things local because gas prices are high. I think they just kind of bake that in. They don't really think about gas prices as a function of doing something until it's very, very closely tied, like we're going to drive 500 miles down to the beach or whatever it might be. Maybe we shouldn't do that. Maybe we'll stay home on a vacation. But as far as like going down to the local restaurant, supermarket, or whatever, they do complain at the bill when they're at the pump, but they don't think about not taking that trip. It's just kind of cost of living. So I don't think it's a big impact. It probably has more impact on the cost of goods sold, as Kevin alluded to, but those are going down, putting Darden in a good spot to have higher margins with menu prices higher, but food prices possibly dropping.
Yeah, we'll have to wait and see. The pullback's probably given some opportunities to people that are bullish on this name, but I'm curious about the consumer, because going out to dinner, going out to a meal, is a treat that maybe people start giving up first. I don't know. Yeah,
but maybe the evolution is you don't go to Ruth's Chris, you go to Olive Garden,
right,
or Longhorn, yep. And maybe it's that trade down that we talk about in retail all the time.
Yeah.
Yep, that's it. You trade down, and next stop is fast casual, and then after that, you're cooking at home, or maybe fast food in between. So
Capital Grill.
There's a few steps where Darden's still in the sweet spot.
Yeah. I want a Stoli Doli right now. So
still Capital Grill, Stoli Doli.
All right, thanks, Landon. Appreciate it. Have a good day.
Good call on that right
Thanks,
there.
Guys.
All right, that's Landon Swan, co-founder at LikeFolio, breaking down the data for us on Darden on this pullback. So, Kev,